The National Bureau of Statistics (NBS) is set to release Nigeria's gross domestic product (GDP) report for the second quarter of 2024 today. In Q1 2024, the economy experienced accelerated growth, largely driven by the services sector, which expanded by 4.32% and contributed 58.04% to the GDP. Year-on-year, Q1 GDP grew by 2.98%, surpassing the 2.31% from Q1 2023, but of course falling short of the 3.46% growth seen in Q4 2023. The report also highlighted the distribution of 106.5 billion naira among oil-producing states from the 13% derivation fund. Revenue-generating agencies received allocations for their collection cost, including Nigeria Customs Service with 20.85 billion naira, Federal Inland Revenue Service with 36.33 billion naira, and NUPRC with 19.46 billion naira. Dr. Samson Simon, Chief Economist, ARKK Economics Data Limited, joins me for more on this. Thank you, Dr. Simon, for joining me today.
Thank you for having me. Good morning, Nigeria.
Good morning to you, too. The National Bureau of Statistics is set to release Nigeria's GDP figures for the second quarter of 2024, and that's going to happen today. So tell me, what are your expectations for the data? Do you see any expansion?
Of course, the economy is expected to expand. We have projections for the entirety of the year. And while the IMF had reviewed downward, because initially they projected 3.3 for the year, later they reviewed it downward to 3.1. The federal government is expecting or is projecting 3.76. Of course, I'm not expecting 3.76, but of course the economy will expand. In the first quarter, we saw growth of 2.9%. I think the second quarter is expected to be a little bit better because the different sectors of the economy are firing on all cylinders. If you look at agriculture, crop production, we are already in the rainy season. So the expansion in that sector is going to be more visible now, unlike in the first quarter. And then if you look at services, services did exceptionally well compared to the other sectors of the economy in the first quarter, and is expected to maintain the same tempo this year, if not even better than the previous quarter or even quarters, considering those quarters in 2023 and in Q1 this year. The same thing for manufacturing. I know the PMI values have been fluctuating, but they have largely been within the region of 50 plus in the second quarter. So all these things are going to contribute, and we're expecting the economy to expand and Nigeria's livelihoods to be a little bit better because of it. I know inflation is likely going to undercut this growth, but all the same, on balance, we're expecting the economy to expand.
I like what you said about the impact of inflation on this growth that we all are anticipating. But tell me, I want to put you on the spot here. What figure are you actually looking at?
Something in the region of 3%. Add or subtract, something in the region of 3%.
Okay, tell me. I mean, let's look at the macroeconomic indices or indications that actually point to that number you are looking at. You've talked about inflation. You also talked about PMI. We know that for PMI in June, I think between May and June, we had 50% and then we had 49%, which of course isn't a very good one. It's declining. So looking at all of that, what's your expectation for, all of this really? How do you think they will contribute to what we're expecting today?
Well, the PMI has not really been exceptional. If you have anything less than 50%, it shows contraction. And if you have anything more than 50%, it shows expansion. If it's exactly 50, it means it's largely on an even keel. It's not expanding and it's not contracted. I know that it has contracted in 49, and that's largely in this quarter. That should be July's number.
Yeah.
Yes, so we're talking about the numbers for second quarter, which is basically for April, May.
But it's also declined in June. It's also declined in June, even though it stayed within the 50% range, right?
Of course. So it may not have expanded by as much. And if you look at it over time, it has not even the expansion has not been much. But even expansion of 10 basis points, I think it means something that things are beginning to look up. And mind you, the manufacturing sector is something in the region of 1/5 of the economy. So I'm not saying that it's not an important part of the economy, but the services That's the services sector. That's the largest chunk of the Nigerian economy. It's something in the region of 60% of the economy. So that's where it really matters. Contribution of manufacturing is important. Agriculture is also very important. But if you juxtapose manufacturing and agriculture combined, might not be as large as services. So all of them are going to contribute to this growth. And we're expecting an expansion on an even keel.
Right. While we understand the contribution of, the services sector to Nigeria's GDP, I do not think, we should maybe discountenance, maybe that's not the word. I do not think we should, forget the importance of manufacturing and especially agriculture in Nigeria, looking at the, potential that we have for that particular sector. Don't you think the reason we're having services sector, trump all of these other sectors is because maybe so much attention is not being paid to manufacturing and also to agriculture?
I don't think there is whether the authorities are giving more consideration to services at the detriment or at the expense of manufacturing or agriculture. It's just that as an economy grows, the services sector tends to be larger than the primary sector, which is around agriculture, and then the secondary sector, which is around the manufacturing. And all of them are important. And we need a lot of, there's a lot of room for growth, whether in manufacturing or in agriculture. But the services sector is the tertiary sector and is expected to be larger. And the bigger an economy or the more advanced an economy becomes, the less important primary sector becomes, and to a lesser extent, even manufacturing, because things will be switching to services. So that's basically the natural thing, according to history, for economies that have expanded over the years.
I still want to bring you back to the fact that we are not necessarily where we should be in those two sectors. And I sort of want you to speak to that, really. What do we need to do so that we can get more from the sectors that are actually very important, even though you say they are in the primary, while we have services moving more to the secondary aspects and all of those?
I understand. We are punching below our weight. All the sectors of the economy, including the services. Nigeria has the potential of being an economic superpower. And if you look at agriculture, we're struggling to feed ourselves. So there's a lot of work that needs to be done. And the major problem with agriculture has to do with insecurity. Are we doing much to tackle insecurity? Next to nothing. When we talk about yield, the major challenge around yield is about inputs, it's about mechanization. Nigerians still use outdated farm implements. You cannot feed a country of over 200 million people and possibly even export when you're still using primitive implements for agriculture. So there's a need for mechanization. But primarily, it's insecurity. That should be tackled. Then if you look at the manufacturing sector, we're talking about cost of credit. Interest rates are going high, and I know they're trying to tackle inflation. They're trying to tame up a high cost of living. But there's a need for considerations for the manufacturing sector. And then if you look at power supply, which is arguably the most important input that goes into manufacturing, we're still talking about hiking the price of electricity. Apart from the price of electricity, the price of diesel, which is the main source of power for these manufacturing companies, the prices are climbing. So basically, there are a lot of headwinds for the manufacturing sector. And if power in particular can be tackled, and then investments can be encouraged, and then the cost of credit can go down, I believe that will go a long way in helping the manufacturing sector to contribute its own fair share to the GDP. Then talking about services, even though services as a sector is almost 60% of GDP, right? But it still needs to expand even further because it's a very important sector of the economy and there's room for expansion. We're a country that has, the government is talking about a $1 trillion economy, and we can even do more than that. So there's a lot of work that needs to be done.
Right, let's move on to the other data, which of course is expected. That's FAAC. But let's look at, the FAAC disbursement for June 2024, which totaled 2.32 trillion naira, driven by increased revenue from the statutory account, exchange gain, EMTL, and VAT. What does this indicate about the fiscal health of Nigeria's government finances?
Well, the increase in FAAC, the receipts have been way better, particularly after the announcement by President Tinubu, the subsidy is gone after the floating of the naira. If you look at it in nominal terms, we have actually ballooned our revenues. But in real terms, the revenues may not be as much because if you look at it, it's basically because of FX difference. You know what exchange rate was before the president came on board, and you know what is the exchange rate now. And even though even the revenues, in terms of taxes, the tax revenues have also gone up. But you know, like when you're talking about indirect taxes, where you tax like for VAT, for example, is 7% per item, 7.5% per item. And when the prices of these items climb, of course, 7% of it will also climb. If something we were buying it for 100 naira, now it's 200 naira. What's 7.5% of 100 naira? Maybe 7.5 naira. Now it costs you 200 naira. So what's 7.5% of that? You're talking about 15 naira. So all these things have contributed to the ballooning of the revenues or the receipts that are coming into the coffers of the state.
So for you, you didn't quite see any real, change. I mean, you didn't see anything fundamental there.
The fundamentals are marginal. I think basically, if you look at it in real terms, the growth might not be as much. But if you look at it in nominal terms, I know it's more than humongous. So in real terms, the growth might not be much. I'm not saying there's no growth whatsoever, but it's not much. There's nothing much to write home about.
Well, are we seeing any commensurate action across all tiers of government concerning, how these disbursements are influencing whether it's the economic activities at the federal, state, or even the local levels? Because when you say we have more funds to share, we should also expect commensurate, maybe some results, really.
Well, the allocation has been larger than it was before now. But if you look at it, like I mentioned, in real terms, the money, these allocations may not be much. If you look at it in terms of purchasing power, and I know they're talking about the increase in minimum wage. Some of these allocations have more than doubled, and it's only fair if you double the minimum wage, if you double the wages of workers. But if you look at it in real terms, when you adjust for inflation, you adjust for foreign exchange, it might not be, it may even be less, it may even be retrogressing. So in terms of purchasing power, the money might not be much. And maybe that's why we're not really seeing any impact, we're not seeing any results that, in all honesty, you can say is moving the needle.
All right. Now, do you think the government actually been able to strike a balance or sort of cushion the impact of the twin reform you've talked about, whether it's the exchange rate or even the subsidy removal? Looking at the impact of this twin reform that has sort of made more money available to the purse of the government at the detriment of consumers' wallets. I mean, the government is definitely the gainer, the biggest gainer of this twin reform, but that's at the detriment of consumers' wallets. Has the government been able to cushion the impact of this so far? I mean, it's been talking about a lot of things, whether it's ASAP or fertilizers being distributed, or even a lot of things really that the government has sort of floated. Has all of this, have they actually been commensurate?
The government has been up and in. The monetary authorities have really been aggressive in trying to tackle inflation. The fiscal authorities, on their part, too, they have been up and in. They have been busy proposing one policy, one program or the other, and they have not done badly in terms of effort. But in terms of results, I think the results are next to nothing. They are not really commensurate. When you floated, when you removed exchange rate, and when you floated the naira, that really affected everybody without any exception whatsoever. But if you look at the programs, they are limited to certain segments of the society. For example, the common one, you share rice almost on a regular basis. How many people get this rice? In some states, they are even packaged to be sold. So there is no commensurate program or programs or policies that will compensate for the hike in the costs of living for Nigerians. So while the government has been busy, there's no doubt about it, but what they have proposed or what they have been doing in exchange for this floating of the naira and for the attempt to remove subsidy, they have not really been commensurate, and people have been bearing the brunt of it. Mind you, the subsidy, they attempted to remove it, but in the actual sense of it, it actually failed. They did not succeed because they are even paying more for subsidy than what they were paying before the attempt at the removal of subsidy.
Well, you would say that one can be blamed on naira depreciation anyway. Well, let me bring this here. The government seeks a 70% windfall tax on banks' forex gain, and Nigerians want to know what the government is also doing with its 587.46 billion naira exchange gain in May, and that sort of brings, bringing it to about 5 trillion naira foreign exchange gain in 12 months. What is the government doing with this? I mean, it's talking about taxing the banks. What is it doing with its own? I know we can talk about a particular fund that was set up, that's Infrastructure Support Fund, but what more do we know about this? What has been the impact of the support fund?
There's no denying the fact that the government has been doing a lot of things, so numerous to count, so many policies, so many programs, some of them which you have mentioned, others you have alluded to. But if you look at it, compared to the cost of living crisis that has been visited on Nigerians, those programs, those policies are not enough. I believe that vast majority of Nigerians are not feeling the impact of these programs. By the way, it's commendable that the government is doing something, and I think we should be appreciative of whatever they are doing. But if you look at it, it's not really enough. And even if you talk about the FX difference, if you look at, they're trying to tax the windfall of the windfall profit that banks have made because of the devaluation of the naira. They want to fund the budget. They have submitted a supplementary budget. They have budget deficits. They have a lot of, actually the receipts expected is where the receipts expected are way below the expenditure. So they can make do with any source of income, any source of revenue that they can grab, they can lay their hands on, including the taxing of these banks, their windfall, including the FX difference. So basically, all these things go into funding the budget, funding the programs that they have all floated. But if you look at all these things very well, I think that there is a need. The one thing that the government, I feel they should have done that can actually move the needle, if you look at the major problem, the floating of the naira, and then the removal of subsidy, the price of fuel, refined fuel went up. I think that should have been proper planned. They should have thought out these things very well before even starting, and they should have made provision. One strategy is that they should have ensured that there is domestic refining, there is Dangote, there are other refineries, and you can even invite more investors. Even Bua is trying to build a refinery. So you should have worked with these people, ensure domestic refining. Domestic refining does not automatically mean that prices will come down. But if you can provide crude for these refineries, that will go a long way in bringing down the prices of fuel. And I think a lot of things can be done, but I don't know. We don't really seem keen about even ensuring that Dangote succeeds or even other refineries succeed. And that would benefit all of us, including the government. But I don't know the politics or whatever that is involved in all these things.
One thing I hear clearly in all of the things you have said is revenue generation being a problem. What are your recommendations for fixing that?
If you look at our tax revenue to GDP ratio is one of the worst in the world. And even compared to our West African peers, we are by far the largest economy in the sub-region of West Africa. But our tax revenue to GDP ratio is one of the worst. So the government knows about this, and they have been working towards it. They set up the Taiwo Daily Committee on tax reforms and fiscal policy, and I think that's commendable. But we need to see results. Nigeria taxes, the number of taxes we have in Nigeria is arguably one of the highest in the world. But that does not really generate the revenue that we need. Some countries have fewer taxes, a fraction of the taxes that we have, yet they generate far more in revenue. So there's a need to work on that. And I think Taiwo Oyedele is a very capable person. We expect them to really do their homework, do their research, and come up with recommendations that are actionable in order to increase tax revenue. Then if you look at our MSMEs, they have really been struggling. There's a need to support businesses. There's a need to encourage investment, whether domestic or foreign, and that will boost the economy, that will grow the economy, that will increase the tax base for the authorities to tax even more. And then the administration of taxation too, the government needs to work on that. There are a lot of things that can be done to increase the tax revenue.
Right. Now, another data that's expected this week is the Q2 2024 labor force. Now, it's expected this week. So can we anticipate any significant changes in the data?
Considering what has happened with the floating of the naira, with the removal of subsidy, with the cost of living crisis, I think the value for unemployment is going to inch up. Is going to increase. That's my projection for it, because even though we have changed the methodology for unemployment, we're talking about 5% now. We are on par with developed economies, which some of us doubt. I think the old methodology better reflects our reality here in this country. But with the way things are, I think it has not been easy. With the high interest rates, businesses have been closing shop, and even for the inflation. High inflation has also made people to reduce the extent of their demand, and businesses have also closed because of that. So basically, that will make unemployment rate to increase. So we're expecting the unemployment rate to go up when the labor statistics come out.
Dr. Samson Simon, Chief Economist, ARKK Economics Data Limited. Thank you for your time on the show today.
Thank you for having me.